Can you spot the Bitcoin spot ETFs? Lame joke, cool concept. Bitcoin spot ETFs have been given the green light by the SEC. Now, is it all we crypto enthusiasts have dreamed about and more? How will this affect your crypto holding? What moves should you make now that this is the thing? Let's dive into the details. Let's first take a look at the announcement. So what was announced? Basically, the Security and Exchange Commission gave the green light, as I said earlier, to a number of firms on Wednesday, January the 10th, including BlackRock, Invesco, Fidelity, Grayscale, ARK Invest, among others. Those firms and others are now allowed to begin trading crypto spot ETFs later in the week. Awesome, right? Isn't this what we've been dreaming about? The ability to get exposure to crypto without going through all the complications of getting a wallet or going through a crypto exchange. I'm gonna need you to pump the brakes. It's not exactly what we've been waiting for. There have been Bitcoin and crypto ETFs approved before. For example, the ProShares Bitcoin Strategy ETF. The question is, how will these new spot Bitcoin ETFs differentiate themselves from those other ETFs? It starts in the type of ETF, specifically the type of asset that the ETF is holding. You see, a spot ETF in general is designed to closely mimic the current price of the underlying asset. With the ProShares Bitcoin ETF and other futures ETFs, the underlying asset is a futures contract for crypto, namely Bitcoin. And future contracts are basically legal agreements to buy or sell a particular asset, usually a commodity, at a predetermined price at a specific time in the future. So this announcement and the ETFs that are now being sold by BlackRock, Fidelity, etc., are different in that they track the current price of Bitcoin, giving investors the ability to get some Bitcoin at its current price without having to set up a wallet, a crypto wallet, and get some individual Bitcoin on an exchange somewhere. While this is great, just like Bitcoin future ETFs, this is a very specific, non-diversified investment instrument, and I'm a fan of those. However, they're very volatile, and one of the reasons ETFs and index funds are great is that they give investors the ability to invest in diversified assets and kind of set it and forget it, especially if they feel that the asset will likely rise in the future. As most crypto heads, myself included, feel that crypto, Bitcoin, Ethereum, etc., will. But if you think that Bitcoin will not only rise in the future, but the direction of all crypto in general is going to be positive in the long term, you're still without a legit option to invest in a diversified crypto portfolio. Now, there are some out there, but nothing like an ETF where you can invest in stocks and in commodities, for example. But don't let that throw cold water onto your excitement, because this new announcement means that the SEC may be open to the idea that a spot crypto ETF is something that might be a tradable asset on exchanges at some point in the future. And that's what everyone is waiting for. But what does spot ETFs mean for your finances? So, likely over the next couple of weeks. And keep in mind, this isn't a prediction. We don't do predictions of assets or their prices or offer investment advice on this channel. We just keep you informed, and you could be informed that you may likely see the price of Bitcoin continue to go up throughout the year. Some say, including me, that it will likely eclipse $100,000 per token. Now, whether that's a good thing or a bad thing is a different matter. But following that, anything is likely to happen, including the price coming back down to earth, which in my mind might be a good thing, for reasons which I'll go into in another video. But how is this going to affect your crypto position? So if you're holding Bitcoin, I would still say it's a smart move to keep on holding, keeping in mind that this is not financial advice, but simply a commentary on how smart you are. Bitcoin movements tend to affect the movements of other tokens as well. So if you're holding on to other tokens, particularly tokens in the first wave, Litecoin, Dogecoin, even second wave like Ethereum, and several of the popular third wave like Cardano, you're likely to see some profits in the near to midterm. That stated, cryptocurrencies, in my opinion, should be more about the technical advancements of personal finance, more than speculating on their value relative to a fiat currency. That's a separate topic for a separate video. So be sure to subscribe to this channel with post notifications turned on so you'll get it when it drops. And if you got any value out of this video, drop a like, as it definitely helps the channel feed the almighty algorithm. And don't forget to share with like-minded finance enthusiasts. Be sure to check out one of the videos on the screen, and remember that a goal without a plan is a wish. A goal with a plan and no action is a wish list. I'll catch you in the next video. Peace.